Hello, dear friend, dear followers, dear beloveds of this professional accountant in a training and employment relationship, Associate TV, Patera TV. It is your asset which you are going to use in gaining knowledge and skills about business courses. I'm your partner. I'm called Benone. So today we are going to deal with payroll accounting and payroll journal entry part 2. This means that in the last session you have seen also about today payroll accounting. Dear friend, dear followers of this Patera TV, what you are going to do on this platform is valuable asset to us. You may like these videos, you may make subscription if you have not already made it, and you may comment below of these videos in order to give us motivation to do more and best for you. So in the last session you have seen payroll accounting, you have seen what is payroll accounting, you have read this question, you have understand what this question asking, but in simple, this question asking to make a payroll accounting and payroll journal entries for both permanent and casual employees for September. Means that this question provides the table showing the basic salary, airtime allowance and advance for the permanent employees, and stating also that during this month Patera hired 2 casual laborers for solving a technical issue. Amy and Jake was hired for 215,000 and 218,000 respectively. So in the last session we have recall about today Rwanda Social Security Board contribution scheme, which we see that the Rwanda Social Security Contribution Scheme has 4 schemes. We have pension scheme, we have occupational hazard scheme, we have maternity leave scheme and medical scheme branch. So we have also given the detail about to this scheme, and we have make a payroll for the permanent employees, payroll accounting and the payroll journal entry for the permanent employees. So today, dear friend, dear brothers of this Patera TV, we are going to make a payroll for the casual laborers and make some payroll journal entries. This is casual laborers. Dear friend, dear brothers of this platform, the percentage rate applied to taxable pay of casual laborers in calculating the pay as you earn is not the same as the percentage rate applied in calculating the pay as you earn for the permanent employees. As you see above, we see that for permanent employees, if taxable income equal to from 0 to 30,000, the tax rate is 0%. Means that the cumulative tax, no tax pay. And if the taxable income is between is between 30,000 and one Rwandan franc and 100,000. The tax rate is 20%. Means that the cumulative tax is equal to 14,000. But the above 100,000, the tax rate is 30%. So the cumulative tax is it's depend on the amount above to the 100. So, but for the casual labors, is not the same for the permanent employees. So for the casual labors, if the taxable income is between 0 and 30,000, the tax rate is 0%. Means we don't pay any tax. But above the 30%, we pay 50% of your taxable pay. So dear friend of this platform, as the question stated above, we have two casual labors. This is their serial numbers. This is the payroll for the casual labors, dear friend. This is their names. You have two casual labors which are hired to solve technical issues. We have Amy and Jake. So dear friend, the basic salary for those casual labors are flows. For Amy is 215,000, and for the Jake is 219,000. The taxable pay is equal to the basic salary for each casual labors. So we are going to see the deductions. So first deduction is the pay as you earn. So we see that on this payroll page, the pay as you earn for the Emmy is equal to 27,750. This amount is obtained by taking the taxable pay minus 30, taking taxable pay minus 30,000 multiplied by 15%. Let me do for it in our calculator. So the taxable pay for the Emmy is equal to the 15,000, and make this 215,000 minus 30,000, which pay 0%, and remaining multiplied by the 15%. So 215,000 minus 30,000 equal to 185,000 multiplied by 15 over 100 over 100. This is, you see, equal to 77,550. This is how we calculate the pay as you earn for the Emmy. The pay as you earn for the Jake is equal to, we take 200, they are taxable 290,000 their taxable pay minus 30 30,000, which pay zero tax, and we get 189,000 multiplied by 50 over 100, and we see that the pay as you earn for the check is 28,350. So the total pay as you earn for both employees is equal to 56,100. So we are going to see the deduction of Rwanda Social Security Board contribution. So the deduction is for casual laborers and the permanent employees are the same. So the rate applied to the taxable pay when we calculate the Rwanda Social Security Board contribution is the same as the tax rate we apply to the taxable pay when we calculate the Rwanda Social Security Board for permanent employees. So here, this is Rwanda Social Security contribution employees portion. The employees portion is equal to 3.3%. This is the three employee contributed to the Rwanda Social Security Board in the pension branch, and 0.3 the employee contribute to the Rwanda Social Security Board on the paternity leave benefit schemes. So in order to obtain those contribution, we get we take the taxable pay and multiply by the 3.3%. Let me calculate this. The employee portion contribution in the Rwanda Social Security Board, for example, the ME is equal to, we take 15,000 multiplied by 3.3 equal to, and divided by 100 and equal to 7,085. This is 7,085. And for the JEC also we take, and for JEC we take the 219,000 multiplied by 3.3 over 100, which is equal to 7,275. This is 7,277. So the total employees contribution portion to the Rwanda Social Security Board is equal to 14,000 322. So the employer's portion contribution to the Rwanda Social Security Board is equal to 5.3%. Means they are 3% the employer contribute to the Rwanda Social Security Board on behalf of their employee of his or her employee in pension branch, and 2% of the taxable pay the employer contributed to the Rwanda Social Security Board on behalf of his or her employee in occupational hazard scheme, and 0.3 employer contribute to the Rwanda Social Security Board on behalf of his or her employee in maternity leave. So that's why their total contribution to the Rwanda Social Security Board is equal to the 5.3%. So for Emmy, the employer contribution to the Rwanda Social Security Board is equal to the 11,395. Take for Emmy, take 215,000 multiplied by 5.3 over 100, which is equal to 11,395. This is 11,395. For the Jake, the employer contribution to the Rwanda Social Security Board on behalf of his or her employee is 11,607, which is calculated in this way. Take 19,000 multiplied by 5.3 over 100, which is equal to 11,607. So the total employers contribution for the casual laborers in the Rwanda Social Security Board is equal to 23,002 Rwandan franc. So the total deduction, dear friend, dear brothers, we are going to see the total deduction from the taxable pay or basic salary in order to get net pay. Dear friend, dear brothers of this platform, the total deduction is from the taxable pay in order to get the net pay. The final pay to the employees is not the employer portion contribution to the Rwanda Social Security Board is not included. That is why see in this total deduction is this column we stated as column E. We say that column E is equal to the B plus C. So the column B is column of pay as you earn, and column C is column of employee portion contribution in the Rwanda Social Security Board. Means that this contribution, this total contribution is only we take the pay as you earn plus the employee contribution to the Rwanda Social Security Board, and we get the total deductions. The employers is not included in the total deductions to be deducted from the taxable pay or basic salary of the casual laborers. This is employer contribution is expense for the business. So as you see, the total deduction is for which is for ME is equal to 34,845. This is equal to this 34,845 is equal to take 27,750 plus 7,095. This will be equal to 34,845. And for the JEC, the total deduction is which will be deducted from his or her taxable pay is equal to 35,577, which is obtained by getting the pay as you earn for the JEC, which is equal to 28,350 plus Rwanda Social Security Board employee portion contribution, which is equal to 70,277. So the net pay for the JEC, we take the column is equal, the column we stated as column F, which is equal to A minus E. We take A. Column A is taxable pay. We take taxable pay minus total deductions, which is column E. We take A minus E. This is the net pay for the ME, and the net pay for the JEC, which is 183,423, is obtained also by taking the taxable pay, which is 219,000 minus this total deduction is 35,575. Dear friend, dear brothers of this particular TV, this is how we calculate the net pay, the Rwanda Social Security Board contribution in pay as you earn for the casual laborers. So dear friend, dear followers, let me jump to the payroll journal entries. So in order to record the payroll journal entries, we have to make 4 journal entries. You have first journal entries which related to the wages and deduction for employees, both permanent and casual labor or temporary employees. And the second one We have journal entry for other expenses and liabilities related to employers. So the other expenses which are not taken account in the gross wage is the employer portion. Rwanda Social Security contribution is other expenses. So this is the journal entries for second journal entries. The third journal entries is to make journal entries for the net take home pay from wage earned. So the fourth one is the journal entries payroll withholdings. So let me start explaining by the first journal entries. Journal entries for wages and deductions for employees. So dear friend, dear viewers of this particular TV, the payroll journal entries, to make it is easy and we are going to understand it very well. The first of all, when we have already made your payroll, you must debit the gross wages. The gross wages for both permanent employees and casual laborers or temporary employees. Debit their gross wages. Here, the gross wages for our permanent and casual labor employees is equal to 1,143,000. This is obtained by taking this gross wage for the permanent employees and we add gross wage for the casual laborers, which is equal to 434,000. Take gross wage for the permanent employee is equal to 709,000 plus gross wage for casual laborers, which is equal to 434,000, which is equal to 1,143,000, which is the amount we debited in our journal entries. Then we are going to credit the three account. We are going to credit the pay as you earn a tax payable account, and we credit the Rwanda Social Security Board employee portion payables, Rwanda Social Security Board contribution, employee portion payables, and we credit the loan to employees account, and we credit net payroll or payroll payables. This is the four account which are going to be credited. So dear friend, dear viewers of this platform, of this particular TV, it is very important to show the deduction of each employee, not take in the sum. So we have debited gross pay, which is equal to 1,143,000, and we are going to credit the pay as you earn tax payable account for Maureen. Dear friend, see in this in this table, in this payroll for the permanent employees, the pay as you earn for the Dylan is equal to 32,000. For modern is equal to 38,000. For Rachel is equal to 28,700, and for Kevin is equal to 50,000. 50,000. And for Jake and for Amy, the pay as you earn is equal to 77,750, and for Jake is equal to 28,350. So this is the pay as you earn taxi payable we have credited in our payroll channel entries. This is tax payables account. Tax payables account. Dear friend, the other account you are going to credit is Rwanda Social Security Board contribution employees position payable account. So for Dylan, dear friend, the employees position contribution in Rwanda Social Security Board, in Rwanda Social Security Board is equal to 500 is equal to 5,280. See in this payroll for permanent employees, the employees position contribution in Rwanda Social Security Board for Dylan is equal to 5,280. For the Maureen is equal to 5,940, and for Rachel is equal to 4,917, and for Kevin is equal to 7,260. And the employee portion contribution to the Rwanda Social Security Board for casual laborers for the Emmy is equal to 7,000 7,095, and for Jake is equal to 7,277. This is the Rwanda Social Security Board contribution payables employee portion, which is this. Dear friend, dear brothers, we are going to see other third account to be credited. The third account to be credited is loan to employees. Dear friend, dear brothers of this Patera TV, remember when we give loan to employees, in that time we debit loan to employees and we credit the bank or cash. So by the time you are preparing the payroll, but you have agreement with your employee that their advance, their loan will be taken to the payroll, so you are going to credit those loan account to loan to employee account you have debited by the time you give the loan to the employees. So that's why, as you see, this we are going to credit the loan. You are going to credit the loan advanced to the employees. So for dividend, the loan advanced to the dividend is equal to 70,000, and for Maureen, the advanced is equal to 45,000, and for Rachel is equal to 60,000, and for Kevin is equal to 50,000. So the another account which we are going to credit is equal to net pay or payroll payables. The payroll payables or net pay payables is net pay which we are going to credit. Dear friend, dear brothers of this particular TV, remember, by the time you are preparing the payroll, it is the not time you are going to make a payment of those net pay or those pay as you want tax to the Rwanda Revenue Authority or those deductions to the Rwanda Social Security Board. That's why those liabilities, those taxi pay as you want tax, those deductions in the net pay which are not paid is the payables. This is why the net pay became the net pay payable account by the time you prepare the payroll. So in our payroll, the daily net pay, this is the net pay for our employees. Let me see for our payroll. So the net pay for dividend is equal to 52,720. This is net pay for dividend. Net pay for Moren is equal to 91,060, and net pay for Rachel is equal to 55,383, and the net pay for Kevin is equal to 112,540. This is net pay. And net pay for casual labors for Jake is equal to 8,155. This is net pay for Amy, and this is the net pay for Jake. Dear friend, dear brothers of this Patera TV, this net payable is credited in this journal entries. This is net pay credited. So bavandimwe, kuvuga ngo iyo tugiye gukora payroll journal entries, hano turafata gross wages kuba permanent employee, no kuri casual labors tuyi debit. Za deductions bya bintu twagiye dukuramo bizava bigize cyangwa se gross wage. Ubundi gross wages ibigizwe n'ubundi haba harimo uwo musoro pay as you earn, harimo izo Rwanda Social Security Board contribution, nimba hari avance abakozi bafashe niyo avance nayo ibirimo, hanyuma ikizasigara kikaba ari iki, ari net pay. Ibyo byose ufashe umusoro ugafata deductions, ugafata avance ugateranyaho net pay, wabona n'ubundi gross wage. Niyo mpamvu hano nimba tudebise gross wage, mbere na mbere turaza dute do credita umusoro tuzishyura muri Rwanda Revenue Authority pay as you earn. Nitumara kuyikredita, indi account twongera gukredita n'ubundi ikindi kintu kizava muri iyo gross, kizagabanya iyo gross wages ni za deductions zigomba kujya muri Rwanda Social Security Board, twongere dukuremo avance. Hano nukuvuga ngo iyo umukozi mbere na mbere afashe inguzanyo ku mushahara, icyo gihe business yo idebita account twita loan to employees or avanced to employees, noneho bagakredita account babahaye. Bashobora kuba bahaye amafaranga cyangwa se bakoresheje cheque, ubwo ni banki bazakredita cyangwa iki cyangwa cash. Ariko nimba barumvikanye mu masezerano ko iyo nguzanyo ku nyungu, iyo nguzanyo ku mushahara bafashe bazayishyura igihe bazarimo gutegura payroll. Iyo tugiye gukora payroll journal entries, noneho ya konte twari twaradebise twita loan to employees turayikredita. So noneho na net pay nazo tukaza no kugira iki kuzikredita. Dear brothers, dear followers of this Payroll TV, this is the end of our session. We have to continue tomorrow for other journal entries remaining. We are going to see journal entry for other expenses and liabilities, and third journal entry, which is net take home pay from wage earned.miss for this knowledge. And we see the journal entry for payroll with holdings, and we see also the payroll in income statement and balance sheet. We have going to see how to record those payroll in income statement and the balance sheet. Dear friend, dear lovers, this is Payroll TV, your learning and training platform about business courses. Thank you for watching this video. God bless you.